What up guys, Crypto Ether here, back at it again with another Bitcoin video. So before we jump into this guys, make sure you do subscribe to the channel, because not only do I cover Bitcoin news, but I cover everything cryptocurrency related that needs attention, right? That being said, let's jump into today's article brought to you via Reuters. The author of this article is Suzanne McGee, so shout out to Suzanne. This article reads, Spot Bitcoin ETFs draw nearly $2 billion in first 3 days of trading. So let's go on to read. But before we do like a little intro guys, it's like these spot ETFs just got approved by the SEC, right? And they've brought in a ton of money, so that's kind of just what this article is talking about. So let's jump into it. A new batch of US Bitcoin exchange traded funds has attracted strong investor interest, though it is unclear if they will be able to maintain the pace of inflows in the coming weeks. So investors have poured $1.9 billion into 9 new exchange traded funds, tracking the spot price of Bitcoin in the first 3 days of trading. Data from issuers and analysts showed, with fund giants BlackRock and Fidelity pulling in the lion's share of the flows, right? So BlackRock and Fidelity are definitely leading the pack here as far as like inflows coming into these ETFs, and it's a lot of money guys. Like 1.9 billion is actually insane. A lot of people thought this was gonna have a huge price impact right off the bat, but guys, sometimes like with these ETFs, it's gonna take a while for that to have like a direct effect on Bitcoin price going up. How long it takes, nobody really knows. I mean, you have to understand that the halving event is coming as well, and most of the time in history's past, a pump doesn't really come until like 6 months after Bitcoin halving happens. So maybe things are still being timed around that. But this is definitely bullish stuff for Bitcoin here. I mean, these ETFs are huge, guys. Look at the amount of money flowing in here. Collective flow to the 9 funds outpaced post-launch flows into the ProShares Bitcoin Strategy ETF, which drew a record $1.2 billion in the first 3 days of trading after its 2021 launch. The SPDR Gold Shares ETF attracted $1.13 million in the first 3 days of trading in 2004, right? So this one blows those out of the water, guys. Like, Bitcoin is different. Bitcoin is different, and we're not just talking small entities getting in, guys. We're talking BlackRock and Grayscale and Fidelity. Like, these are the biggest asset managers in the world. We're talking like the biggest money in the world, guys, literally. Still, the investments in the long-awaited ETFs launched on January 11th a day after receiving approval from the U.S. Securities and Exchange Commission, or the SEC, fell short of the most aggressive estimates of the first day inflows in the billions of dollars. Market participants said it remained to be seen to what degree funds tracking the notoriously volatile cryptocurrency continue drawing retail and institutional investors, and which issuers will come out ahead. Some bullish analysts have said flows could reach between 50 billion and 100 billion by the end of the year. Bitcoin is down more than 8% since January 11th, after rallying in the recent months on anticipation that the ETFs would finally get the nod from the SEC, which they did. But you have to understand here, guys, a lot of the time with these big events, a lot of time people buy the rumor and they sell the news. Now, how long does that last for? We do not know. But the real takeaway here is that something really good happened for Bitcoin. I mean, we did get approval from the SEC, and that's huge, guys. You have to understand that that's mass adoption taking place at its finest, and I think in the near coming future we're going to reap the benefits from this SEC approval, right? So we shall see, though. It goes on to read, so far the launches have almost measured up to the hype, said Todd Son, an ETF analyst at Strategas. The next question is, what is their staying power? What will those flows look like in 6 months' time or 6 years from now? For now, lower fees and name recognition appear to be the key factors in drawing investors. The iShares Bitcoin Trust ETF, IBIT.O, from asset management giant BlackRock has attracted more than $700 million, while Fidelity's Wise Origin Bitcoin Fund has topped $500 million, according to BitMEX Research, a cryptocurrency research analyst firm. Fees among these 9 issuers before waivers range from a low 0.19% to a high of 0.39%, right? So BlackRock is charging a fee of 0.12% for the first 5 billion in assets and the first 12 months of trading. After that, the fee will rise to 0.25%. Fidelity is initially charging 0, rising to 0.25 after July 31st. Those fees will be less than half the average ETF fee of 0.54% as calculated by Morningstar Inc. And that's really been the key factor here between these asset managers, has been like the fee war, right? Everybody wants to charge the lowest fee to get more investors in, essentially. So that's what that's talking about. Those that charge lower management fees will unsurprisingly make themselves more appealing compared to their peers. Brand recognition is another core aspect. So a lot of it is these big names like BlackRock and Fidelity are huge names, guys, like the biggest, right? Bitcoin brands, while BlackRock and Fidelity have dominated inflows, other issuers with a strong brand among cryptocurrency aficionados are not that far behind. Both Bitwise and a joint venture of ARK Investments and 21 Shares are initially waiving fees. Bitwise said that inflows in the first 3 days totaled 305.5 million, while the ARK Shares 21 Shares ETFs has had inflows of nearly 230 million, according to BitMEX. By contrast, Grayscale Bitcoin Trust, or GBTC, with a fee of 1.5%, which is a lot higher, guys, has seen outflows this month. The trust was converted into an ETF at the same time the other ETFs were launched and has seen 1.16 billion in outflows in the first 3 days of trading, data says from BitMEX, right? So Paul Carger, the founder of Twin Focus, a boutique wealth management advisory firm, says some of his clients that are selling their GBTC holdings and moving them to the cheaper ETFs, right? The new ones. So we're seeing a shift from GBTC to the new lower cost ETFs, as well as some clients putting more money to work in cheaper options from brand name issuers, he said. So everybody's just trying to move their money to the cheapest ETF, right? They want to get charged the least amount of fees, it seems like. And that's just really been like the battle here, guys. Like everybody's racing to these ETFs that have the cheapest fees, essentially. But understand, guys, like, again, it's not gonna have like a direct impact on Bitcoin price. These are spot Bitcoin ETFs. It's not like money's just directly buying Bitcoin, guys. So there is a saying that, like, once supply dips after this halving event and demand increases from these huge spot ETFs, and when these entities start to market Bitcoin, right, like they have unlimited amounts of marketing, guys, you're gonna see a shift in mainstream media about Bitcoin, like people's fears and not wanting to invest in Bitcoin because a multitude of reasons, right? It's gonna become more of the norm, essentially. It's gonna be a level of marketing that cryptocurrency's never seen before because they've never been backed by huge entities like this. So that's just kind of my take on it. I think in like the next year or two, we're definitely going to see that impact things quite a bit, right? When these huge asset managers like BlackRock start to pump money into marketing, we're going to see a huge surge, guys. But I'm ready for it. I'm just going to sit here and continue to cover anything that I see important in the news. So do make sure that you guys are subscribed to the channel. But yeah, other than that, it's Crypto Ether. I'll catch you on tomorrow's video. I'm out of here, guys. Peace.